We'll do it live.
Okay.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
Yeah.
All right, and we have our panel back. Jesse is on voice. Apologize for the technical difficulties. Andrew made an oopsie.
Oh, there goes the moving bus.
So, but I think it was for the better because now we actually have Jesse here on voice. Again, Jesse's power is dead, so he'll just be, I guess, coming in and out when he can. Audio works. We tested it a little bit. We are also removing one of the topics because that was Andrew's topic. Since he's not going to make it to tonight's stream because he had to take off, we removed that topic and we replaced it with other topics that some of us want to discuss here today. So again, I'm probably going to stay on for longer to answer any questions, Q&A. And then please answer the Q&A that I offered to all viewers. It's a macro related question just to kind of gauge where you guys are at. Also, if you enjoy the live stream, feel free to leave a like, subscribe if you're not subscribed, etc., and all that jazz. Okay, we're going to be very quick with the Grand Theft Auto conversation because we kind of already covered it.
Take two on take two.
Yeah, take two on take two. That's a good way of putting it. So let me go ahead and share my screen. And just very briefly, the things we kind of discussed here. You have Grand Theft Auto 6 accumulating roughly 90 or some odd million views. Was it 70 or 90?
It said 90 currently.
Yeah.
90. All right. So very popular game, very material revenue stream for Take-Two Interactive, sitting at a $26 billion market cap. A lot of the value generated from the Grand Theft Auto franchise comes from the multiplayer component, where you have, of course, a lot of spending from gamers who actually buy in-game currency and not just the actual sale of the product initially. While the sale of the product is actually still projected to be still rather insane for the size of the company. What was it? 7 billion, and it's going to cost about 2 billion to make. So roughly a gross profit on the product of about 5 billion. What happened? Honest mistake on the last stream. On the way out, it was accidentally ended. But yeah, that's pretty much the take on Take-Two Interactive. We kept that brief. I think we'll move on to the other topics now. Should we talk about home builders, macro, or Dollar General? I'll let the panel decide.
Talk about your Dollar General.
Yeah. Let's get the rage out.
Okay, Dollar General.
Tell us about your company.
Yep.
Let's go.
Tell us about my company, my business.
Formerly.
How dare you?
Yeah. So I'll talk about it from the perspective of both club members and public on YouTube, because there's the holding co portfolio. But I sold out of Dollar General in all regards. So both the holding co and the personal holdings. The personal holdings took a loss in Dollar General, roughly 20 some odd percent on a 2.6% position. And with the holding co was a bit larger than that in terms of allocation, but actually a small gain. But nothing compared to the terms of the loss in the personal holdings. So the Dollar General, what were the reasons for selling? There's a couple reasons. I had two counter indicators or contraindicators that actually are very bullish on Dollar General. And that includes Paul from Everything Money and Peru Saxena. So I don't tend to like to be on the same side of any trade that those two individuals are on. But jokes aside, because that is somewhat of a joke, it's serious and also joking simultaneously. There are some glaring issues with the company that I don't feel like it's worth the effort. There are other ideas that I can put capital to, and you want to cut your losers and water your winners. So with Dollar General, and again, it's 2.6% position in my personal holdings, and it's a little bit larger than that in the holding co. In the holding co is smaller than 1 month's contribution in terms of size, so it's not really material. But the biggest glaring issue for Dollar General was what I thought was their inability to address, to my satisfaction, what they're going to do with shrinkage. The customer base that Dollar General services tends to have a higher issue. I'm trying to be politically correct here, but tends to have a propensity to have observable instances where shrinkage occurs. How corporate was that answer?
That was very corporate. Everybody cancel this man.
Cancel.
Was that response? Extremely corporate.
Boo this man.
Boo.
Yeah. Oh, I like this. See profit, take profit. You know, for some stocks, of course. For a lot of stocks, yes. But there are going to be some losses. Then we can harvest those losses. Unfortunately, sometimes though, it was an idea that I was excited about. It had its place, and it actually fit within an overarching theme. But I actually think there's better plays in that overarching theme than Dollar General. Now, Dollar General might still do well. It actually still might do well from here. But for those concerns, for those reasons, I'm out. You see what I did there?
Yeah, okay, Mark Cuban.
Yeah, you see what I did there?
Arctic.
We're going to talk about CPNG and Baba a little bit here, but yeah, I just wanted to address that with Dollar General. This is not counting as a portfolio update. I'll be talking about that in a portfolio update, but this serves as the first instance where I publicly, because there was also within the club that we discussed this already, but publicly that I'm discussing the sale of Dollar General. And it's actually very recent. This happened today, so you're actually getting a very I guess speedy update on Dollar General. But some of the things that they have going for them, because I don't want to say it's only bad. They have, of course, the new CEO. That's not really the only reason to be hopeful, but management change from the previous CEO to the actually older CEO that preceded him. And this CEO saw Dollar General's meteoric rise. And one of the things that the market was excited about his return is that potentially he's going to switch from quote unquote peacetime management to wartime management. The other part that makes some investors excited is something like a Dollar General and discount stores tend to do well in a market downturn. And I like Christopher. You know what? Someone on this panel agrees with you a lot on this.
Smart
Dan.
man. Smart man there.
Yeah.
There is no next Tractor Supply.
The next Tractor Supply is Tractor Supply.
Yeah.
Yeah, Tractor Supply is actually I would actually say publicly here that it's a good company. I agree with Dan. Dan's right. And that's Dan's baby, okay? So Dan's been bullish on Tractor Supply for quite some time now, and shouting from the rooftops how much of a quality company it is and why. And he also was shouting that Dollar General's hot garbage.
Yes, I was.
I want to give credit. He was.
My theory, though, honestly, I worry that Dollar General's, like, if you look like just where they're located, like those places are becoming more populated. Some of the places they're located, like in the Sun Belt, and I'm like, they've probably not had competition from the big box stores because they were, rural areas. So if those are becoming more like urbanized areas, let's say like Kentucky, Tennessee, the Carolinas, now they're going to have like maybe a Lowe's or Home Depot or a Walmart makes sense now in an area that, they didn't have competition. That's what I'm worried about, on top of shrinkage and the customer base they sell to in the first place. I don't know. I feel like are their best days behind them now?
I haven't actually mentioned this before, but as a kind of like a mental exercise, we know that retail can get really bad, a la Walgreens. So margins can fall a lot from here, operating margins from Dollar General. Remember that Dollar General has historically had very good operating margins. There are some components within the value chain that Dollar General has really struggled to evolve with, and that's, of course, labor. So if you actually listen to some of the complaints levied by the employees of Dollar General, it's understaffed, underpaid, et cetera, et cetera, et cetera. And you actually take a minute to research that. You start to uncover a couple, glaring issues that as a shareholder, it kind of worries me. And what some of the issues around shrinkage kind of stem from probably is also tied to the employees not being very satisfied. So if you look at Home Depot, perfectly powerful, wealthy, speaking in terms of, as an employer, and profitable retailer, and you look at the how they treat their employees, how they pay their employees, are their employees satisfied? Do they like to work there? Do they want to come back the next day? Yes to all the above. You go to Costco, similar experience there. Heck, I even think you get a much better reception at Walmart, but then you go to Dollar General. Oh no, Tractor Supply, Dan. How do employees feel at Tractor Supply?
I've looked at a while ago. I looked at their like Indeed page. I didn't see anything too bad looking. Seems okay, I would say.
From the basic reviews that I've seen from Tractor Supply's, employees do like to work there.
Yeah.
Dollar General, not at all. They're usually paid on the lower end, where within their vicinity. And then on top of that, there's some the main complaint from employees is typically allocation of hours, because it's not just about your hourly rate, it's also how many hours your employer gives you when you're working on hourly rate. And if they're giving you low hours, it kind of sucks for you. So making those changes is probably going to compress margins in the medium to near term. And I think they're going to have to do something along those lines, or at least focus really heavily on making the stores a lot more efficient than they currently are. But I still don't know how they address shrinkage. I don't know how they're going to address it. I see how Walmart's addressing it, Amazon, Costco, everyone else. These value stores like Dollar General, Dollar Tree, I don't really know how they address it. Very similar to something like Ulta Beauty and some of these other stores. I don't understand personally how they address it. So they might figure it out. Like I said, this could perform really well from me selling. But I think there's other things that I'd rather focus on and allocate capital to. And at the allocation that it was at, it wasn't really worth its salt to me. So, yeah.
There ain't much in retail worth looking at. I mean, I was talking to someone. There's only like a handful of retailers that I would be even serious about even considering.
It's a tough business.
It's a tough business. Yeah,
it's a tough business. Yeah, yeah. Like so for anyone who doesn't follow me on Twitter or not in the club, I'm watching this publicly. I am kind of playing a game with the club members that every time I go to Costco, I have to buy one share. So I'm technically a shareholder of Costco now. And then we'll see how large the position gets, because it's every single time. And that counts the business center, a regular Costco, the whole thing. And I actually am finding out that I frequent Costco a little bit too much. But it is what it is. Give me some good clips and faces. ASO employees use shotguns as security. So there are some members that are really into ASO. I don't get it still. It's definitely not for me.
It's
But
like
you know what is for me? Crocs.
Oh, jeez. Come on.
Looks like ASO has had a little bit of a rally here, up about 24% from October. But I don't really get it. I did see that they are not having problems with shrinkage. If the fact that they are using firearms to prevent shrinkage, that's pretty funny. speaking of which, the news: the Macy's security guard got stabbed today or yesterday.
Oh,
Do you guys see that in
jeez.
Philadelphia?
I did
Oh
not.
my god.
Yeah, during a theft, it seems the perpetrator was arrested, but yeah, they were stabbed to death over a robbery on Macy's, and then Macy's proceeded to close the store. So I think that is it. Just like we're having problems with certain jurisdictions with enforcing basic laws.
Most likely part of it.
It's
There's definitely a problem with like local, law enforcement. At some point, like we talked about this last summer. I think it was like,
yeah, we did.
you would hope at some point that it would get so bad that like local politicians would react to like the videos of like 20 people just running in a store and grabbing everything, right? And
Yeah, you'd be incentivized too because that's your tax base. But now, what do I know?
Yeah, well, hey, maybe everyone will just buy things from the new concept stores things will be delivered to your home.
Oh, okay. All right.
And
Just Amazon.
they'll just have to rob your home
Oh,
in order to get the product. I don't know.
yeah. There
Well,
you go. This is how you solve the housing crisis.
it's sold out.
Just, yeah, conspire to have mass home robberies, and there you go. Lower home prices.
Lower home prices. There we go. Yeah, we're thinking about it.
Yeah, outside the box.
So that covers why I sold Dollar General. Now home builders.
Yeah.
Where do we begin on home builders? So I've been looking at some home builders here and there. And first commentary is how wrong I've been to doubt the home builder rally. I was suspicious of it going into 2023, and I didn't participate in any home builder. But had I done the opposite of that, I would have done pretty good. Arguably better than some of the other stocks I've invested in. I don't know exactly, if I were to be honest with myself, what allocation I would have hypothetically done. But point to the conversation, I had no allocation to home builders, and I was looking at some of the, let's say, favored by value investors, such as NVR, which is kind of like has become the standard or the golden child within the home builder space. Strong capital allocator, buyback story, etc. I think they just approved the $750 million buyback, and their market cap, for context, is about 20 billion. So it's not nothing.
Yeah, moves the needle.
But I don't know if you guys are looking at any home builders in particular. And I'll put up MVR stock just to show the performance in a year to date.
Year to date, bros.
Year to date, bro. Actually, I thought the performance would have been better. So on year to date, that's nothing. So it's actually below my portfolio. So
because I talked about this last week on my stream, and I'm gonna approach like we're so under like housing sales historically.
Yep.
It's just, I think if people are like, oh, we're never gonna have a booming housing market with interest rates like this. Like, it doesn't have to be a booming. It just has to come back to the norm. Like, I think sales are down to like what they were after like 2012 or 11 at this point. So my approach, instead of the home builders, I'm looking at like suppliers, I guess. Either building suppliers, or I already have HVAC exposure.
Carrier,
flooring companies. Simpsons made SSD ran away from me, but trying to get some ideas for other people that supply, maybe with a mix of commercial and residential. So I'm not 100% in residential on this play with the companies.
Yeah, there's one stock in particular that has been on my watch list for a while. I was talking to one of our members today about it, and I haven't gotten into it because I'm genuinely afraid of moving the stock. I'm not going to be saying its name publicly here. Do you guys know which one I'm talking about?
Probably not in my case.
It was in one of the chat rooms.
Oh, okay.
But no, solid business, strong insider ownership, etc. And it fits within that play that Dan was just talking about with Supplier.
Oh, okay.
Yeah, and then you have a couple of the larger, more well-known supply companies that offer a variety of products to home builders. You know, you have BLDR, BLD. I think you probably are also thinking of what's it called? I'm forgetting the ticker, but there's another one, BPD. No, I'm forgetting what the other ticker is, but all of the adjacent businesses have done well. You didn't have to invest in home builders per se, but yeah, there's some opportunities around, not just directly in the home builders themselves. So DHI, I should have had bought DHI when I did a video on them. Dream Homes, we talked about Dream Homes, which is a up and comer. People say it's reminiscent of NVR. It has insane insider ownership. I think it's above 60% insider ownership. But yeah, let me look at the stock Dream Homes.
Oh. Thanks for that.
No, it's not this one. Hold on.
Okay.
I'm misremembering the name then. It's not this one.
Oh, good God.
Yeah.
What are we doing here?
Don't you love that market cap? But
wait, what is it? Oh, shit, I can buy it. Can I buy
this? Is not the stock in question, ladies and gentlemen. Yeah, sorry, it's this one. Similar name.
Okay.
Dreamfinder Homes. Yeah, this is the name. So that's the ticker. This one has, again, 60+% insider ownership, market cap 2.43 billion. So yes, the founder and CEO is a billionaire. Congratulations to him. And their performance year to date, because year to date bros is 171.92%. By the way, I'm trying to make this more common. Year to date bros, you'll see them all over the internet. There are people that just, well, again, what's that guy's name again? I always forget his name.
Which one?
Most recent one that you guys sent me.
Oh,
the CPA guy.
Oh, we talked about it on the first failed live stream, and I already forgot.
He's a CPA. You guys sent me his
J
video.
Money. Thank you, Julius.
J Money.
Thank you, Jason.
Yeah, that guy. Yeah, is posting tons of videos about his year-to-date performance, unironically. So yeah, please everyone normalize the term year-to-date, bro. Commented on their videos, just kind of poke fun at that, because it is kind of silly to then hide, for example, like a 2022. When we perfectly well know that if you combine the two, they're probably more than likely underperforming the market. So yeah. But yeah, Dreamfinder Homes, this is the year-to-date 171.92%. Dan, are you buying? Have I sold you?
Wait,
I'd have to do more digging.
Short interest is roughly 18% now.
Oh, whoa.
Yeah.
Why?
I don't know, because I haven't really seen. One of the things that might be the concern or reason for the short interest is the markets that they're focused on have been really hot markets, and there are concerns that those markets, in the Sun Belt, Austin, etc. One of the concerns might be, and this is why I was kind of trying to find something why people are negative on it, might be cooling off quite rapidly, and so Dreamfinder might be, fall victim to that.
Overbuilt, perhaps.
Yeah.
Okay. Yeah, because like when it comes to home builders as a whole, like just like really really sloppy, almost unuseful commentary from me with a broad brush is I could see it being a weird ride where real estate demand could be such where like home builders have a shot, but zoning laws undercut and restrict the opportunities for home builders to even get revenues in the first place.
Are these modular homes? Do you know? I guess we don't know.
Modular homes? No. There are a couple ones. Hold on, let me find their tickers.
Yeah. The only other point that I had was I could see it also being a weird ride for some of these companies if enough meaningful people have some strong opinions on real estate and think, oh, there's a correlation here, therefore I can make money, and you're in for a wild ride. maybe on the up, maybe on the downside. Again, I don't know, but
the only thing that bugs me, like modular home builders, so not
Mhm.
not all home builders, is that
Yeah.
historically modular homes are worth less than regular homes
Yeah.
for whatever reasons.
Yeah.
So I've always been worried. I'm like long term, will people catch on to that and they won't want to spend the money to build a modular home if they have the option to buy just an older home they can renovate? Or will towns take that into consideration when they're like, okay, why are we going to allow permits for a modular house on this land when it's going to be worth less, right? For tax to be taxable income for the town because it's based on the market value of the house.
Yeah.
Well, I found one of the modular home tickers, but the other ticker that I was forgetting, which was installed building products, IBP.
Okay.
This is another kind of adjacent investment someone could do to kind of capture the home building. Oh my God! All right, I remember them being down. They've rallied 50% since I looked at them in October.
They're gone nuts.
Oh my God. Yeah, that's crazy. No, because literally last time I took a peek at them was in October.
People are gonna be like, "Where's the value? We can't buy this now." It's like people are like, "Listen, it's freaking hard right now to find things that are undervalued. Everything's run up so damn much." It's like,
Yeah.
It is. I mean, because now with my monthly contributions, I'm looking around at the port trying to see if there's anything. No, there's still some names that I think are still really good value. And then what I'm trying to do at the same time, kind of getting back to the sale that I did, Dollar General, is just kind of figuring out where I can make my portfolio more efficient. There's still two other stocks that are marked for death that I've discussed within the club. I'm going to wait till I do a portfolio update to discuss what those are, probably after I sell them. But yeah, it's in general, it's tough to find value right now. Let's just say it's really hard to find like that obvious, that one I could say I could allocate 10+% to this stock. I'm finding it hard to find those.
Oh, one point of admin. I believe Jesse is backstage.
I see him there. Yeah.
Yeah, power
What's going
restore.
on?
There's Generac now.
Yeah, that's right.
I'm joking. I'm joking, Generac shareholders.
Now we're gonna go for 3 hours. No,
Long utilities.
long utilities. Well, we can talk about utilities in a second with macro topics.
No.
But
Let's do it.
the ticker that I wanted to share with Dan, because he was asking about modular home builders. You have Sky, SKY, Skyline Champion Corporation, and let me remember the other one. I think, no.
I'm surprised Caleb hasn't yelled at us, by the way, for not using Yahoo Finance as a random side note.
It's just simple. For just pulling up a chart, Google Finance, it's the simplest one. If you copy this out, this overlay, then I'll use Yahoo Finance. But this is like super simple. I can click and drag, show performance.
Yeah.
And I can jump very easily, and then also see like relevant links too. But the year to date here in Skyline is a measly 20%, Dan. So it's a trash company.
Yeah, company going up is still trash.
Yeah, because it didn't go up enough. It didn't go up enough. Also, one thing you'll notice about some of these modular home builders is their balance sheets are actually pretty good. They have a net cash position that you can't really say for a lot of the standard single family home builders. I think NVR has a net positive cash position. Don't quote me on that. But yeah, Skyline has actually a net positive cash position, which what I'm trying to say with that is they have more cash than debt. But yeah, I'm not really too interested in this. I'm actually also in agreement with Dan that I think there's more value in the adjacent industries that supply certain things to the home builders. If I had to buy one home builder, it would definitely be the management team that's proven themselves over the years and has a very strong capital allocation strategy that's very favorable to shareholders, being NVR. NVR on any pullback, that's the one I'd want to own, if any at all. So, Cavco Industries is the other one. This is another modular. And let me see how they've done year to date. Okay, so a little bit less trash. So, yeah.
Not modular, but what do you think about DHI? I looked at that one a bit ago.
Can't say anything negative or positive about it, but probably good. What do you think?
It looked interesting. I just don't know like the industry that well, right? So, like from what I saw, it looked like it could be a potential good opportunity, but like relative valuation wise, I just didn't really know.
Wow, look at that.
Yep.
Warren Buffett. It was disclosed.
Mm-hmm.
It was disclosed to say.
Yeah, I think that was like in July, August or something like that. And then I want to say I did a video in September or a little bit past September. And then I remember being like 100 is pretty interesting. And then sure enough, it got down to like 101 or something like that, and then ripped.
Did you notice the correlation? Did anyone notice it? Here, I'm just going to put it there.
There we go. Yeah.
Oh, wow.
But correlation doesn't equal causation.
But
is that from the narrative change on interest rates right there?
This was October, yes. So
Yeah.
anything in October, yes. That was the shift in the change.
So
So
would have been a good way to play it.
Well, I'm just going to tell you,
Potentially.
DHR Horton is a trash company because installed building products has a year-to-date performance of 75. So DHI is trash.
Obviously.
Yeah, obviously. BLDR and how they've done. Look at that. Pretty much the same follow-up there of 34% from that October. And then I think BLD's actually not done that. Oh no, never mind. Scratch that. Oh yeah. It's like poof.
Hello.
Yeah. What is that now? Oh, sorry. What is that? Is that an all-time high? Yep. That's an all-time high.
Yep.
So commonalities between Top Build and Builder First Source, both serial acquirers, actually relatively decent sweet spot market cap size at that under $10 billion for Top Build, and about under $20 billion for Builder First Source. Pretty volatile.
You don't say.
Yeah, pretty volatile. So you have not just this move down here, but now that we're zooming out, these don't look that big, but back in the day, these were pretty big.
Oh,
Of course, that's COVID, but like this was also pretty big back in the day. But yeah. Why does this video say it's been removed by uploader?
Don't know.
I don't know. I don't know what that means. OC. What's ticker is this? I'm not familiar. Oh, Owens Coring. Okay, so this is like a roofer, right?
No, I thought it was going to be biotechs.
No, yeah.
I thought it was going to sneak one in.
They roofing, but then they've also moved into like specialized products for like wind turbines and green technology.
Oh, this is up Dan's alley. This dance like
I owned it for a while.
Oh, dang.
Yeah, this is like a Dan stock. When as soon as he starts saying like they also produce these components for this and this.
Is that when you got out, Dan? You're like green technology. F that out.
I sold it at 100. I don't remember when. It was like a year ago. But
see, Dan, you need to be like me.
Never was 70. That's when it was 70 and I got out at 100. I guess I should have held it.
What do you mean you sold? You can't do that.
Yeah, you're not allowed.
Yeah,
You're
the mob will come
not
after you.
allowed.
You have to hold stocks forever and ever and ever.
This is basically an index fund, guys. You should just.
Oh no,
this is basically an index fund.
Well, it was a 4% dividend when it was $70. So now it's 1.5 yield. So it's dead to me. But
it's dead to me.
Dead.
Yeah.
the
When it
true
is in mid-max.
analysis begins and ends at the payout ratio. Let me just remind
Yes.
everyone.
Yeah.
You find a stock, you find out what is the payout ratio, and then you follow up with the following statement. If it's under 50%, you say, looks like they have plenty of room to grow that dividend.
Mm-hmm.
And then, boom, that's your video analysis. That's the
We
extent.
only
of
do
what-
dividend cash flow analysis. That's it.
Yes, you just look at payout off of earnings, current
Yeah.
earnings. If it's under percent, immediate buy because they have plenty of room to grow the dividend.
That's right. Google, worthless. Meta sucks.
Speaking of, we've been seeing a
So
little.
you want me
bit
to nerd out Owings Corning? They have a really cool product. They have a fiber.
do it.
You're gonna love this. They have a fiberglass rebar for concrete instead of using iron.
Oh, really?
Yeah, it's lighter.
Yeah, I was
and
gonna say that.
Wowzers.
yeah, so they say it's lighter, produces stronger concrete. It's more friendly to the environment. Blah blah. It's also insanely more expensive. You might
But
see
you-
them at Home Depot, maybe.
Can you not bend it then?
I don't think you can bend it.
Right? Because it
they're
it
pink.
depends
They're
on
pink
how you're
bars.
using it, probably.
Yeah.
Interesting.
But one of the big selling features, there's like it won't rust it won't produce like corrosion in the concrete.
Yeah.
Where like rebar, if it gets too close to the surface,
Mhm.
it'll rust and you'll see mark.
Yeah.
It's supposed to last longer. But last I checked, it was like 5+ times more expensive than normal rebar. But that's the type of things they're trying to move towards, this company.
and how much longer does it last though? If it's 5 times more expensive, does it last
Probably not
6
worth
times
it.
longer?
Yeah. Well, that goes back to the idea of, our company's going to buy that product because it's better for their business, or are they going to buy it so that they can pat themselves on the back for being more green, right?
But also, you're not
Because
going to
is that where we're heading?
rebar
I don't
out of,
think these are nobody's going to force them to do these things. I don't think. I don't think
yeah.
carbon taxes and that stuff is happening. So it's all going to be voluntary, I would suppose.
We just need FASB to come out with a green balance sheet. I'm joking, FASB. Please no.
Speaking of going green, this is not in the topics that we were going to discuss, but that's something that's happening right now. Energy is actually facing a little bit of a sell-off here. So I'll show you the year-to-date. So just to start with the top tier analysis, the year-to-date, it is down 5.7%. So it is literally a dead company.
Trash.
Absolute trash.
I'm kind of interested, actually.
I know. I was gonna say this one actually has been on the radar. This area.
Well,
Yeah.
Dan, you're a moron because
my
there's
God.
companies like Palantir.
Yeah.
No, I'm kidding.
You don't buy when it's
It dropped
red
more
year-to-date.
in one day than the year to date.
I've just been thinking, like we talked about this a week or two ago. It's like these, are these really oil companies or are these energy companies? Because I looked at like some of like Air Products and Chemicals earnings were kind of crap, and they do hydrogen production. Plug Power is probably going bankrupt at some point. But then like you have Exxon is doing carbon capture, they're doing hydrogen to some extent. Now they're going to do lithium mining. So it's just an interesting idea that if you don't look at these just as oil companies, but like maybe they're the ones that have the cash and the ability to create these green energy sources that we thought all these other little specialized companies would have.
I saw that, Fabio.
Dex is, he's finally learning. ExxonMobil has room to grow the dividend. So, Dan, you're on to something. No, but we were discussing this today. So there's a recent, I guess, political event between Venezuela and a neighboring country, potential threatened invasion, which I think is a nothing burger. You have a joke of a military over there, Venezuela. And then, selling off on that news, I think is interesting. I think nothing's really going to come of it. I'll be surprised if that does happen. But looking at ExxonMobil, Chevron, a couple other names within the United States, I'm actually interested in Exxon over Chevron. I don't know if I'm alone in that.
I'll have to do more digging. Ultimately, is what it boils down to.
Both
like
solid.
well,
but-
Exxon has refineries. Chevron does. Maybe I'm wrong. Chevron, I don't know. They're both huge companies. Chevron is more about transportation, I think, right? They have ships.
Yeah, and Exxon just made a really big acquisition recently.
Oh yeah.
But I think unlike Occidental Petroleum, obviously with this acquisition, they took on way less risk because they've already, back in the day, when you looked at Occidental's story in the past 5 years, there was a time where people were really confident that they were going to go bankrupt because where energy prices were at. Occidental Petroleum was losing money, and they borrowed a ton to make that acquisition happen. They outbid Chevron for Anadarko Petroleum. And now you have a story with Occidental Petroleum. If they pay down the debt, if interest rates were to fall, those are both tailwinds that could propel the stock higher. ExxonMobil, on the other hand, you don't really have that opportunity in valuation like you do with Occidental Petroleum because there isn't really much wrong with the story. And oh yes, thank you for mentioning that Chevron is acquiring Hess. So you have an acquisition from Exxon, you have an acquisition from Chevron. The balance sheet at Exxon is better than Chevron's currently. That could change. Both probably solid picks, by the way. And both are companies that have decided to focus on capital return to shareholders, which is, I think, more favorable in the form of dividends and buybacks. And both of them, unlike Shell, have plenty of room. I'm not going to say to grow the dividend, Bacon. They have plenty of room to expand production.
That's all I live for.
I just remember that there was like that silly meme that I posted and that you
Dividends are
retweeted.
die.
Oh,
the three
the
dragons.
the three-headed dragons.
The
Yes,
three-headed
yes.
dragons. Yeah.
I think that's funny meme because it's true. I've always wanted to be an oil tycoon. So
Would you call these sleep well at night stocks?
Ooh.
We're getting all the dividend terms today.
I
feel
would
it's
not
too
call energy.
cyclical to do
Yeah, I
that.
was gonna
Yeah,
say,
it's
like,
too cyclical to call it sleep well at night.
Yeah, if
You
you
know
need
what?
cash,
I buy BHP and I sleep well at night because that's not cyclical. I like to buy gold miners too,
no. Oh well. Okay.
and a certain Bitcoin miner.
Oh yeah. Yeah. There we go.
That's done really freaking well. But
Why don't you
I
just
don't
buy
have the balls.
Microsoft? They own Minecraft.
Oh yeah, they do.
Yeah, you really cornered the mining market.
They really do. Brood has a point though.
Yeah.
So companies can rock you to sleep at night though. Mara, I like a better company in my opinion than Mara. I actually sold recently in the holding co, but I'm still keeping a watcher, and I actually might just buy it in my personal holdings. So I still have an allocation to it because I really do like the company. I just wanted cash to buy another company. So
No, is it actually a crypto mining company?
What is
the one that you're talking about?
Mara?
Or no, never mind. Ignore it.
No, competitor to Mara. No. The crypto mining company is CleanSpark.
Oh.
Yeah, and I think the year-to-date performance is actually
It's almost at 10.
Oh my god.
It's gone moon.
Yep.
Whoa.
Yeah. I mean, hell, Coinbase is still chilling up at that 30 to 35-ish billion market cap. So
This is still that meme though.
yeah.
Oh yeah.
Oh, it definitely
It's
is.
still
It definitely is. Yeah.
Oh, I spoke too soon about sleep well at night stocks. There you go. That one. Perfect.
Yeah.
This
I'll
is
tell
your sleep
you-
all night stock, Dan.
You just won't wake up in the morning.
See, this is a non-trash stock.
Yeah. Yeah, just don't go any further.
This moves off of only fundamentals.
Yeah, obviously.
Obviously. Man, if I was them right now, I would issue a good chunk of stock.
Yeah.
And then just have that cash and
issue the stock and then be like, we are no longer a mining company.
We're no longer a mining company. Or they pivot into.
What they did before, man.
Oh, wasn't it just something with solar panels?
Shoot, was it? I thought it was like some type of home energy like monitoring systems or something weird. Like
Pivot to.
Oh, you're going to
EV
tell me they
making.
bought like a silver mine or something?
Yeah, pivot to EV manufacturing. There we go. That's what we need.
They
we
copied
are
one
now
to
Cape
buy.
Coin.
Yeah.
They buy coal miners. They trick all of you. Yeah, that's absolutely insane. Wow. And to think Hayden was trying to convince me to buy this, and I looked at
Wait,
him. And
did
was
he?
like, "Oh, yeah.
Yeah.
Like Hayden?
Yes.
Jeez.
Me and
That
Hayden were
guy.
talking about it for a while. Actually, I sold at like 350 or something like that.
Oh my gosh.
Yeah. Yeah.
It happens. It happens. There's no way to know. There's no way to predict that.
It was when I was cleaning out what I would call my stupid speculative positions.
Well,
he sends a bunch of like really different ideas that I normally wouldn't consider.
So notice with the speculative positions, I don't have much churn at all there. Like I will hold a spec till it gets wrecked. Well, usually if they're like fun ones, because the Chinese shitcos, I consider them worthless, and I'm having fun making money while other people can't make money on them. I'm sorry, that's a dig. That is a dig. I'm salty a little bit, but
with Baba.
Everyone's with Baba.
Yeah.
But I think, like, for example, one of the speculations that I sold that was a legitimate speculation. So there was Egan, there was the potential fraud company or alleged fraud company. Not fraud company like they're a total fraud, but that they've committed some let's call it inaccuracies or misrepresentation. Gosh, MPW. But the one I'm thinking of that I got rid of was Overstock.
Yep.
Yeah. But I held it for a while, and it was a speculation that they would be able to do something with their alternative assets. I don't know how it's done. What's the new ticker?
I'm positive. It's let me double check.
It's like BBBY.
Watch it be like
BYON. BYON.
Oh, B.
Yeah, it's not. It's not.
Oh no,
yeah.
I think it's actually lower than when I sold it. Then $22. Yeah, I think it's lower.
Yeah, there's been changes as far as.
Oh my god, yeah, I think it's lower. I'm gonna bet that it's lower.
Yeah.
But yeah.
Full disclosure, it's a speculation that I own, and it's positioned as such. So.
Who has a? You know how he gets into obsessions with certain things?
Yes.
Yeah, I have no idea why he gathered an obsession behind this company. So, for full context, everyone, this is a speculative fund holding that I would take. These, yeah,
Yes.
I would when I would do a buy order. If I had, let's call it couple, let's say dollars off of the order that didn't go through what I originally wanted because there's random fluctuations in the share price while I'm committing to a market order. I would take it and I would throw it into BurgerFi.
Very nice.
As a complete fun, and I would literally tell everyone when I did portfolio updates, I'm buying this because milkshakes. And you know what? It's an entitlement. But I am very surprised if they don't go bankrupt.
Wait a minute. Hold on. It occurred to me. Did it end up being that dollar milkshake didn't work out? In that specific case.
Oh, get it. I get it.
That's why you got to go for hot dog soda.
Yeah, this is a throwback to all the people that know that have been around for a bit.
Yeah, like hot dog soda method is. We're gonna see how that performs.
I'm thinking better than BurgerFi.
It's definitely gonna perform better than BurgerFi. BurgerFi again. I'll be so surprised if it doesn't go bankrupt. But I just want to highlight how Fuhat has a personality type that he gets random obsessions.
Yes.
So, and at this point, I'm gonna hold BurgerFi to spite Fuhat, just so it's there. Because I think what was it as an allocation, like decimals of a percent. So I won't even notice when it goes bankrupt. but I will be super surprised if it goes bankrupt. Okay. BurgerFi is the new MCD. Dear God, if it does become that, it would unironically. If it got to the market cap of McDonald's for somehow freak of nature, not going to happen, by the way, that'd be, I don't know. I'd have to pay someone something. MPW got me too. Okay, but anyways,
you have to own a franchise at least.
Yeah. Yeah. So what allocation was this as a speculation? I'm curious for you, Jesse. Clean Spark.
Oh man, can't even remember. I think it was a couple percent, something like that. Couple
Oh,
percent
wow.
of like, couple percent of like 15% at the time, I think.
What?
It was a couple of percent of just my individual stock holdings.
Oh,
Yeah.
Right.
Yeah.
I think you
So
meant
it
it was
was
a couple percent to
2%,
15%.
like
I was
like
oh my
15%,
God.
No, it's like
40%, something
It's
like that.
it's like a Russian nesting
It,
doll.
it was one of those things where I was like, this is kind of becoming a distractor position in a way, and I'd rather just allocate that capital other places. So I ended up getting out of it. I think it was like January, February in 2023 when it had the initial run up to like
No.
$4 or so.
Hey.
But
There's no harm in making money.
Yeah, I was gonna say hard to go broke making money.
Yeah,
It is
very hard
it
to go
is-
broke.
Yeah, in theory it is possible, but
In theory, it's
yeah,
fine.
in theory, yeah, like anything could happen.
So summarizing the energy, though, you guys
Yeah.
interested in which ones? Because Dan said you were interested, right? But which one?
Probably
have to pick
Exxon
one.
over Chevron. Just looking at them quickly.
Yeah. Yeah, knee
Yeah.
jerk. Exxon
Yeah.
maybe.
Knee jerk Exxon for you as well, Jesse.
I'll just follow the crowd, sure.
All right, Exxon. Exxon's the big winner here.
There's plenty of other players.
Wait,
to, consider.
BP.
Oh no! Oh gosh, let's throw in BP into here. But I can kind of quickly go through some of these. So issues with BP, general relative inefficiency compared to the other players. Also, Shell. Kind of skipping over to Shell. They have let's call it. They don't have the best portfolio out there. The amount of barrels that they have until they run out is, I think, the least out of all the oil majors. Total Energy, you have to deal with the French government, which already sucks. ExxonMobil, you got good management, good balance sheet, again, good portfolio. Chevron, relatively the same thing. ConocoPhillips, really good break-even point. Diamondback Energy, ticker symbol FANG, also a really good break-even for energy. You also have Occidental Petroleum, which is, again, more of a debt pay-down story. Generally speaking, good break-even point on energy prices. OPEC, kind of a broader issue going on. OPEC decreasing supply, but you have U.S. picking up. So if you actually look at oil production across the globe, United States is picking up to going to the upside. OPEC nations are going to the downside. This is benefiting in the short term U.S. oil companies because, again, oil supply is kind of relatively stable / or coming down, and U.S. oil majors are able to sell energy into that market and benefit from that in the short term. If we see further demand destruction across in the industrial sector, that could put pressure on energy prices, and the supply drawdown from OPEC might not be enough to stop that. You'll love it at the pump. They won't love it. But yeah, those are some things to think about. What's
if we love it at the pump, what does that mean for Musa? Again, I'm also joking there.
I was gonna wait till a portfolio update to talk about that. Well, yeah. But...
Yeah, that can be later.
Yeah,
it's gone stretched.
Yeah. All right, you want to talk about it? Fuck it, let's talk about it.
Great company.
I'll talk about it
gone
again.
Stretched.
Okay, that's a beautiful summary. Bacon, you wanted to add to it?
Musa, it's the thing that I thought to myself, yeah, I don't see what the catalyst is, and here I sit poorer for it. That is what we call opportunity costs.
Well, I mean, when we were getting it, like it
Yeah.
was pretty dang cheap. It,
Yeah.
it didn't need a lot of catalyst, right?
No.
But valuation is kind of run to the point where they no longer have as much power with share buybacks and things of that
Yep.
nature. So it just becomes more of like a, okay, well, now are you buying it because you think they're going to outperform growth wise on top and bottom line, or if your thesis was still it's cheap, they're going to be able to buy back and kind of control the share price via buybacks, then you're probably you might be looking for the exit. But with your like initial comment, I mean, the price of oil, the price of gas, as long as they don't have a ton of time between their churn rate, they should be able to sustain margins pretty well. But that's more of efficiency of them being able to get through their inventory in a decent amount of time than anything else.
Yep. My reasoning for selling Murphy's USA was when it got to, and my sale price was actually pretty good. It's looking smart now, in the 375-ish range. The rationale that I gave the club members was already what Jesse outlaid regarding the change in the current dynamic, where Murphy's USA, when we had originally purchased shares, had a lot going for it. The valuation was really strong, and the capital allocation strategy was heavily in favor of shareholders by, just doing crazy amounts of buybacks. As we saw a re-rating in the stock, we're now trading at, I would call it, relatively elevated multiples for the stock historically, and the buybacks are less and less and less effective. So that's really diminished a huge chunk of the story, at least for me, and mainly one of the reasons why I allocated to it heavily. It's one of the stocks that I did actually pitch to Chit Chat Money when they invited me onto their show.
Yep.
But yeah, I'm happy with its performance in my portfolio. It did its job.
Got to do the live streamer thing.
What?
Got to do the live streamer thing.
Oh, yes. Let me pull it up. Would be more likes if Yahoo Finance was used. Okay, I will use Yahoo Finance.
I called it.
At some point in the future.
Let the record show I called it.
I will say this. If one adjustment I could request from Yahoo Finance, if I could get the drag feature, that'd be really cool. This drag feature. Like the simplicity of it. I can just drag. There are cooler things that Yahoo Finance does use. So I'll go to there if I want to look at specific dates, because I can't do that with Google.
Caleb, you paid $5 for that? Baller.
It's advertising.
Balling.
It's advertising.
This
is advertising.
The person who goes above and beyond.
We're working on it.
Do I
you have that feature, there's no reason for me to use
$5 for us to tell them what to do.
Yeah, there's no reason for me to use Google at that point.
Oh, I don't get that feature.
Yeah, you got to update. You got to update, and then no, it's not there yet. They're working on it.
Yep.
But yeah, fundamentals and buybacks doesn't matter with winter coming, and OPEC could cut more.
I mean, but the thing is with Musa though is and this was the counter that I respected, was that they didn't really make a crazy amount from the spread on gas at the pump. So that was largely irrelevant.
Yeah.
Which I respected. It's just I didn't see it. I was trying to respect the catalyst more, if that makes sense. And I was like, you know what? I understand the business, but maybe catalysts do matter. And again, I get to eat opportunity costs.
Well, and I like their methodology of keeping the pump price low, right? Keeping that spread tight and getting people in, and then forcing them into more habitual daily purchases of convenience items, right? So, I mean, I like that. The thing that I'm looking at right now, because I still have a Musa position, is like, okay, how far do I think this could really realistically like stretch, right? Because it's still like, I don't know, it's still not like crazy expensive, but it's not like, you know, trading at a 9p or whatever stupid evaluation it was trading at when we were buying it, right? So yeah, I mean, I think I took off like a little bit, and I'm just kind of just still thinking about it, still trying to decide if I want to just kind of like this one that I just want to let it win a run and just see what happens, or do I just kind of want to reallocate that money somewhere else?
I mean, I guess it depends on like how strong the idea deck is. But on this note, thank you all for having me. I must depart, sadly.
See you, Bacon.
Yeah, I'll be
Thank you for
listening
joining.
in the background.
Thank you, Bacon.
Yeah, with Murphy's holding co is completely out of it, but personal holdings, I'm unwinding it a little bit slower. I was hoping that I would do the unwind closer to when all the shares would be long-term cap gains, but you know, we don't always get our wish. So
It just, I mean, you tax loss DG, you know, you're good. You're
not
good.
really enough to
Okay.
yeah, sadly. Well, not sadly, no, it's a good problem to have. But yeah, no, the difference in size is significant. Dollar General was 2.6% of port. Musa and Holding Co was significant, and then personal holdings allocation percentage was like 5% or so. So roughly double, and with a much larger gain than the loss in Dollar General.
So you just have to sell some naked calls on a
I gotta
certain equity to
Oh yeah,
really harvest the loss.
just speaking my language.
I still can't believe that person did that. I'll just say their name. I can't believe Paul from Everything Money was so dumb to do that. Wow.
Did
Selling
you
the
hear
naked.
when I had that guy Andrew on my channel? I told him what Paul did. He was like, "Why the fuck would you do that?"
Because he's the
He's
LeBron
like,
James of
he
investing.
shorted Nvidia. He's like, "Are you kidding me?" He's like, "No." What?
Well, I mean, the thing is, I think we all criticized him for it in the moment he did it. So it's not like we were talking about it, or we're only talking about it now after the fact. Because we had criticized them publicly on shorting QQQ, SPY, and he shorted it in the down market.
Mm-hmm.
So he had a theory that 2022, a bad year, he got crushed on his stocks. I mean, every single stock he bought. Remember, he's the guy who said prior to 2022, during the down market, I'm going to perform better than these growth investors, blah, 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 talk down to people. Then 2022 comes around. He doesn't perform better. He underperforms harder. And then he goes, okay, this is going to continue because I'm going to follow the thought process strongman criticizes all the time. If it went up a lot, I'm bullish. If it went down a lot, I'm bearish. It went down a lot. All his stocks went down a lot. US is collapsing. I'm bearish. Shorting. What does he say? The S&P 500 is like 70% overvalued. Something like that. He still uses the outdated metric of GDP, price to earnings to GDP, the Buffett indicator, whatever. Paul was talking about his problems with his brother in the Morgan household interview. What is wrong with him to talk about these very personal things?
He doesn't have a filter.
No.
Like, wow.
Yeah, Jesse, you want to talk to us about your deep personal problems here live?
Yes, I do. Guys,
right.
I got issues.
I got issues. Dan, you want to talk about yours too?
No, I'll pass.
All right.
I'm a rainbow full of sunshine. What are you talking about?
It really is funny that he picked like literally the worst things to short. Like the worst. Like,
yeah.
oh my god.
I would
Yeah.
love to grill him on the short because I do these, so I would love to ask him like some random questions about it. But I know the answers. He did it just on his valuation software.
I did.
We know that's what he did. So
I love the comment of like he's like, I'm going down with this ship, and I'm like, yeah, you are.
But like I showed in my video, like 10 minutes of freaking research would have stopped him from doing this because I found research that was from the time frame of him shorting. I'm like I'm not saying I'm not saying I saw that Nvidia was going to trip 3-4x, but you could see they were going to do well. Like
I'm a bit salty because as I was doing my ANET research, I knew that Meta was building all of their AI supercomputers off of Nvidia graphics cards.
Mhm.
Like they had that in all their engineering docs, and I was like, man, if I would have just like I don't know, put the dots together a little bit sooner, whew, that could have been a fun ride. But
I was picking
next
last
time.
year. I was picking AMD because I could see AMD literally taking Intel market share constantly.
Yeah,
So that's why. And then AMD dropped to like $60. I was like, oh hell yeah! My friends and I are like, yep, buy it up. But
These are the shoulda, coulda, woulda investing moments that we'll always be talking about. But I mean, what do you guys think? Because we talked retail. I'm gonna now preach to the choir, and Dan's gonna hate me for this. Or I'm not gonna preach to the choir. I'm gonna make Jesse preach to the choir.
Okay.
REITs.
REITs.
Yeah. Dan's like,
Let's
no.
go.
Yeah,
Let's go.
what are you talking about? We're team.
Oh wait,
we're
that's
Agri
right.
brothers. Hello.
That is right. Yes, there is some overlap. Sorry, I'm thinking of biotechs. Who's in the biotechs in the chat gonna be like, oh, and bacon too.
No, we can talk about ARE.
Yes, because fuck it, I'll say it because I was gonna do it on the
I am
update.
green on Vornado. I will have you know. I held it through all that shit. All right. And I didn't paper hand it, even when it dropped to $12. So
Bravo.
we're green
right.
now.
REITs. We're all shareholders of various REITs. I think we have some overlap in many stocks. Does everyone agree realty shareholder? Jesse, buy one share. Come on. Don't do this.
Okay, I'll buy one.
Buy one share. All right. But
We're gonna get him on this capital mindset.
the KRC shareholders, raise your hand. Dan.
California's a dead state. I'm sorry. It's just
come on. Buy one share. Alexandria shareholders. CCI.
I've had it in the past. I did have it in the past.
But... Brandy Wine. My hands down.
That's the most degen one I have, I think.
Cube Smart. Damn you. I mean, you.
Andrew, why do you think that was a bannable offense? It's not a bannable offense. It was... SUI shareholders?
SUI. No.
Looking lonely there.
All right, but I have Andrew.
Oh yeah.
Yeah, man. Just look at all the portfolio updates. It hasn't moved. It's not moved.
Send that man specifics on your buy and sells on it. So
yeah, you gotta send the buy and sell alerts. Buy and sell alerts email.
That's the Palladium access you guys are missing.
Let me think. AMH.
AMH.
Come on, Dan. American Homes for Rent.
Oh man, I used to know every REIT. I swear to God, I used to know all of them. Like I have the list on my computer too of all the REITs in the US.
So yeah, I got decent. Yeah, we have some overlap. We have some decent overlap. But let's talk about our favorite ones. What's your current favorite one?
Agri's probably the only one I would buy right now, actually. At this
I love Agri, but I don't think it has the best return potential right now.
I don't know, man. I feel like mine are all kind of a little bit more, not that they're like super speculative, but they got a little bit more upside potential, so they have a little bit more risk on them. But I don't know. CCI is really interesting right now. I'll be interested to see what Elliott management does with that. If they're able to sway it much. I don't necessarily agree with their stance that management should get booted, because it kind of seems like they are just reiterating what management has been preaching for the last, like, I don't know, a couple quarters. So I don't know. But I kind of am. It's a little satisfying that they came out with that open letter, because it hit a lot of points that I was also looking at. So I think there's a lot of room for efficiencies being made for monetizing their fiber plan, bundling services, and a lot of small cell expansion. So that'll be interesting. Of course, KRC, like that thing's just like dirt cheap. I think, oh man, but then ARE probably has one of the best debt loads in the
Entire REIT
office-ish.
space. Almost
Yeah,
no, in the
office-ish
entire REIT
or
space.
entire REIT space. It's absolutely phenomenal, and I kind of wish I would have been buying that one more when it was in the low 90s. I was buying CCI instead. I built a decent position in that, which it's worked out well so far. But yeah, ARE's debt load is like, it's nice.
Yeah, I think with my real estate exposure, I kind of took a wider net approach, because I have SUI, AMH, which is now like, that's my residential investments. Then I have some Crown Castle, which is, I didn't get nowhere near the good price you got. My Crown Castle is relatively fresh, but because I've been actually in and out of Crown Castle. For those of you who've been following the portfolio updates, you might remember it from a while ago. So I had Crown Castle, got out of it, kind of was still watching. And then I missed the relative recent bottom. But I'm still in agreement with what Jesse's saying here. The potential there is real. Digital Bridge, another investment of mine. I commented on this when the recent earnings report came out, and we kind of covered it live in the club. So I'm saying it now. Digital Bridge talked about how bullish they are on small cell going forward into the future. So you take their commentary, and it's like, it's not just coming from Crown Castle, which of course they're going to say that because they're really banking on it, and they have a lot riding on the success of small cell. You have another company that is a fund manager or a money manager based off of on their investors' behalf, and they're telling you at the same time, hey, we are really bullish on this going forward in the future. We're going to escalate our investments in small cell. They have the other optionality. They can go into other things, but they're choosing to focus more on that.
Have you seen Crown Castle's backlog of small cell?
I don't remember it having memorized off the top of my head, but I do remember that it's quite significant after, like, the deployment's going to be quite significant after 2025. Is it?
It's like, no, I think it's even now. They're still ramping up. I think they have a 60,000 small cell backlog, and they can only deploy right now like 15,000 a year, and they're ramping up that up. So they have like 4 years just in backlog of small cells. So it's like, okay, like, and most of those small cells are going to be bundled with fiber plant service, as well as probably monitoring or some type of service agreement there. So I'm very interested to see how just the unit economics expand when they're just adding small cells and not building new sites or getting new leases on poles or spaces around town. It should be pretty juicy.
You want to hear? Okay, here's from the earnings. I read the transcript. For towers, we expect to generate organic revenue growth of 4.5% in 2024. For small cell, we expect organic growth of 13%, driven by around $60 million of core leasing activity. We increased new mods from 10,000 in 2023 to 14,000 in 2024. Oh.
And then if you go into their 10Q, I think it is, they actually list out their backlog. So right now you've got two sides fighting each other. You have the increase in small cell and net new tower leases offsetting the reduction from the Sprint T-Mobile merger. So it's going to be pretty flat growth for probably a year. And then I think Sprint completely drops off end of 2024.
That's okay. What I was thinking about when I was thinking 2025. So that's when they're going to reaccelerate growth.
Should be, yeah.
So small cell, you're talking about the 5G nodes,
Yeah.
right? Okay.
Yeah.
Yeah, because
Like they put them on top of a telephone or like a utility pole or something.
Yeah, and it's just going to get more insane with 6G. I mean, we still have a long runway with 5G, but 6G is going to be like they're going to go from small cells to even more small cells to, I think the next iteration is tiny cells. Those are going to be like cells that are inside buildings too. So it's going to just drastically increase as we go through like a higher and higher band frequencies that we're deploying over to cell phones.
I'm going to be able to.
So 6G will have a smaller range than 5G, like when they actually have the nodes.
Yeah, and I was looking at some of the specs sheets. I think it was like they were doing like, I want to say it was at least 100 gigabit data transfer over 6G frequencies.
Oh, God
so
damn.
yeah. So you're talking like replacing internet service, fiber service potentially.
One of the things I'd done looking at 5, because I was looking at it, I think through the lens of Verizon and AT&T, and it's like they're not. We don't even use 5G fully. When I looked at this like a few months ago, we're not even close to fully. They had this usage idea of 5G that at that time I was looking at it like really wasn't coming true yet.
I think it's going to take roughly till 2030, right? So we start to see 6G roll out.
Probably, yeah.
Yeah. So long way from now. 7 years will go by fast, but
but like small cells are kind of the first iteration out of like your standard like tower deployments, right? Like macro cells. So like what I'm thinking is like, okay, what company is going to be so focused on that like the business that they steal during that transition is going to be even a bigger runway into 6G, right? Because if you already are using a carrier that's providing you a small cell lease with fiber access plus monitoring, then it's a really easy transition into 6G tiny cells.
Oh, okay.
Right. So the runway almost becomes expanded if you really land and expand on the 5G small cell.
So even more bullish on Crown Castle for the long
I'm
term.
just saying, like, the potential is there for a pretty long runway.
I feel like Jesse's just trying to pump his bags. Everyone be very cautious about this. He's
well, I mean, they're gonna have like I've said this before that like I could see Crown Castle being a laggard in 2024 as they're still digesting a lot of that Sprint runoff, and it's kind of making their financials look a little bit stagnant. I'm going to be more interested in looking at the specifics of the fiber small cell side of their business versus, what they're doing just on surface level.
I mean, I'd be a little bit weary on taking a not cautionary stance. That's the wrong word. Expecting that the market's going to just crap on the stock because, it might already be well known depending on how management's commenting on it.
Yeah.
Updating everyone. Hey, growth's going to accelerate here soon.
Well, I mean, that's why like I positioned myself to where I was very happy with my allocation at the price that it was at. So
You know, Jesse, how people 5 years ago or 3 years ago, let's call it, would never believe you if you had told them Crown Castle will get to the price it got. Like, I wouldn't be able to argue with someone. Let's call it on like
No.
some random forums, like Seeking Alpha forum, right? You talk to someone in Seeking Alpha forum, you told them in the comment section, Crown Castle will get below $100 a share. They'd be like, "You're a moron. Shut up."
Yeah. It hasn't touched 100 for over 5 years.
Yeah.
Oh my god.
And this is the other thing. A lot of people who were like in love with the stock back then, a lot of them would not be you who was buying it below 100. They're like, "Oh, it's below 100. It's trash. It's dead."
Oh man. I wonder what my
Everyone says
cost
they're
basis
that guy,
is.
and then everyone proves that they're not that guy.
My cost base is 97.23. So
97.23. Wow, that's gonna be bragging rights. Yeah, my cost basis is over the $100 mark. So yeah.
yeah, I think I started when it was around 110 or so. And then I kind of staggered in down to what it got down to like 80 something or 90. But right, yeah, 85-ish or so. But yeah,
Yeah,
it's
right.
interesting. Like position management and accumulation strategies are very interesting because man, you never know how crazy it's gonna get. Like individual stocks can just
Are
they
you
can
saying there can be inefficiencies within this wonderful market?
maybe a little bit sometimes.
Sometimes, yeah. Yeah. I mean,
Oh yeah.
it definitely happens more often than we think. But yeah, I think REITs in general, if I were to kind of summarize my thoughts, and don't want to put words in your mouth, but I feel like you feel the same way. 2023 has been an accumulation year for REITs. It
Yep.
still remains relatively attractive compared to other sectors. So I'm still looking to accumulate more going into year end. And that's what I've actually been doing, trying to reshuffle capital and then kind of refocus into some real estate. But yeah, I think KRC is, including dividend, up quite a bit for me. It's up okay with just capital appreciation, but including dividend, it's pretty good. I don't think it's actually outperforming the market year to date for myself, but it's close. And then and that's without the thesis actually fully playing out. That's with it still being
Well,
cheap.
it hasn't even reverted to mean, right? Like it's still really far off of where it's historically traded.
Yeah.
Because it'll be one thing to get potentially a re-rating of risk off of lower interest rates in the debt load. But
That's the other thing.
if it re-rates off of like California sentiment getting better, then man, that could be crazy.
Yeah.
Because it is objectively still pretty dang cheap.
Yeah. The two tailwinds for anyone listening, it's California discount plus well, actually three. California discount, office REIT discount, REITs in general.
Yep.
So there's a lot of discounts being applied to a company like Kilroy, and the business hasn't really suffered. But hey, it's not. I'm not betting the farm on it. But what's your allocation approximately of your single stocks? Because I know you're mainly indexed, and then you have single stock exposure.
It's actually fairly big. Actually, oh shoot, is it? It was my second largest holding for a second after the bounce back, because I bought more when it went down to like 28. Took one more stab at it, but I think it's like around 11% allocation right now.
Huh, nice.
So, but like I said, well, I guess after my individual stock portfolio has grown, mostly just from the outperformance of some of the names. So, yeah, I think on like a total basis, KRC is still, like 3.6% or so, which is still like it's decent.
Oh, that's around my allocation actually for KRC. I think it's sitting at the 3.5% at the moment. Somewhere around there. Sphere. Andrew Marshall's trying to guess to talk about
Sphere.
Sphere.
I saw this the other day.
What are your comments on Sphere? Because
Ooh, pretty.
that's Dan did the hat thing. Like he's like, oh, I don't know if I have anything good to say about this.
I don't know how they can realistically expect that investment to ever pay off.
How much did it cost? $1 billion?
2 or 3?
2 billion?
I think they raised 2.
Ooh.
Like my thought was like, so they're gonna have to have bands come in and do specific setups for the Sphere, right? You can't create your setup and then travel with it, so you can only do it in Vegas. So I was just trying to like think, how are they going to make this work financially? Like, are they going to have a residency? Because it's probably expensive to set up, you know, like they did U2 so far. Because you have to have an artist come in, they're only going to play there. They can't take the Sphere with them to another city.
Just put it in your backpack.
Yeah. Like how expensive? We don't know, right? Because they haven't operated. Like how expensive are they
It'll
paying?
be interesting
a lot
to see
out
what
these
type of
artists to
income
get
they're
them
getting from
in?
the advertising.
Oh yeah, and the exterior advertising too.
Yeah, because like Google, I think Google like had it for like a week or two during the AWS or the Azure conference in Vegas. Google was renting it out, putting up Google Cloud ads. But I mean, you got to think that's not going to be like a ton.
No.
It's really neat, but I'm just like, geez, the thing costs a lot of money, and I think it would have been one of the things I would have wanted to go to just for the novelty, like purpose of it in Vegas. I'm not a big Vegas person, so it was pretty cool. But yeah, I don't know. That's a lot of money to dump into it.
James Dolan is involved. Blech.
No interested in a company like that, but Fuhat clearly loves it. Just like Reborn Coffee.
Ooh,
He likes lights and sparkly things, I guess.
you guys will love this.
Damn. All right.
Okay. So, 2 questions. How much do you think they estimated it would cost to build?
I'm going to say they underestimated how much it's going to cost. Billion.
1.2 billion. I don't know.
Dan, on the money, you get the prize of the day.
Oh wow.
What's his problem?
So, I don't know. He's not broke. There you go.
In the future, undisclosed time frame.
Yeah. So the estimate was 1.2. What do you think it actually came in at?
2.2.
But you got Teamsters. 2.4.
2.3.
Oh, okay, right in the middle. Well, I thought he was going to get it again. I was like, all right, you're cheating. You sent
That's like
him the
New York
Vegas.
City freaking extravagance on that.
So they pitched it at 1.2. I think they had to do a second raise from investors because they couldn't finish it, and then all said and done, 2.3 billion.
I'd have so many questions invested in it. Like, how long do those bulbs last? Like, what's the repair? Are they going to be repairing it constantly, or?
I would just be like, can I watch stuff there anytime I want? Because then I'll give you $10 or something. Like,
oh,
yeah, but yeah, I thought the same thing, man. The maintenance on that must be insane. Like,
what if a bird hits it? Like, are they going to break it? Like, I don't know. If it's all shiny, birds might fly into it. So,
I don't get it. I don't get the investment at all. Is there a lot of retail hype around this?
I don't know. It's down 15% today.
I haven't seen a YouTuber talk about it really.
You should be the first one. You should create a cult around it. We know that's how you succeed on this platform. You create a cult around a particular stock.
I cringed when I put my Disney video out, let alone Sphere video.
Oh, hey, we're all Disney investors. That's right.
Oh, yes. You want to talk about Disney?
Yeah.
You want to pump bags? We got to pump bags.
Up.
All right, everyone watching this video, please pump our bags. Without Disney success, we are all bound for the streets. I've bet
I mean,
the farm.
actually, you know, if it went down a bit, I wouldn't mind that much. So, but
I would like
we're
to
on
see it
YouTube.
at 70.
We're on YouTube, so we have to say positive things only.
Yes, because otherwise people take it as an attack on their character.
Yes.
Yeah, but I think Disney is just a bundle of potential. I maintain the same idea. It's a bundle of potential. They got to get out of their own way. And if they choose to, they can become a very, very, very profitable company. And I can make a lot of money, but we'll see. We will see. I think I already have the king of content in my portfolio, so I'm happy. Netflix.
I was like Paramount.
Paramount?
Well,
I guess the next
AMC
big,
networks.
so they're going to come out with one app, I guess. I don't know if they're going to
Yeah.
split Hulu and Disney in the app, but that's, I think, next early spring.
I think it's
Right.
going to be. I'm hoping it's a single app, all content consolidated into one.
Yeah.
I'm hoping that's what it is, but
When I like you can kind of see like they have some adult content coming on Hulu, like the Shogun show. I think it works separate, like one app, but maybe they keep them separate products because like net like is there really like a Netflix? If you're thinking Netflix, if they just slap the Netflix logo, it's a Netflix show. Like you don't have it. Do you have like an idea of some specific content? Probably not.
Oh, like that they're known for?
Yeah. Like would you
Stranger
like what?
Things.
Okay. Oh no, I mean
Right.
like Disney, you know what a Disney content is. Is there like Netflix something you see that you're like that's
Oh, yeah. Usually, if I see content, it's garbage. I think, yeah, it's probably from Disney.
I mean,
Dang.
Netflix has a lot of exclusives.
It's my own investment. I can talk about it. But yeah. Usually, if I find myself cringing at the content, it's probably Disney content.
So check out this balance sheet destruction on Sphere real quick.
Oh yeah, let me pull this up.
Isn't that beautiful?
Oh, good God.
So they went from about 1.4 billion in cash to 327.
Oh my God. Just
Yikes.
looks like Bono had a good day, I guess.
Let's see. Free cash flow, heavily negative. Look at that SBC though.
Yikes.
Man. And then let's see. Right now, income statement. There we go. Yeah. Doesn't look great, Bob.
Not great, Bob.
Not great, Bob. Fun stuff.
Interesting. Yeah, I don't get the interest, but hey, it's a company and it's out there. Did you?
It's a company.
Yeah, it's a company that's out there and you can buy it. Did I miss CPNG? We have not talked about Coupang yet, so I guess we can talk about Coupang. Do you guys have any thoughts you want to share about Coupang? I'll just share mine quick if you're not.
Well, I
No,
guess
I
I'll
don't.
probably bounce if you're going to talk about this. So
Oh,
I got nothing to
Dang.
say. So,
No, I was going to keep it brief, but we can probably talk about that and close the stream. Which, if you guys have enjoyed the stream, feel free to leave a like, because I'm seeing there's about 70 people in here, and we stay pretty consistent around that level. And the likes, they just don't match up. Either you guys don't like the content, or you like the content, but just leave a like. Follow on Twitch. Fuhat says. Apparently, I don't shout out the Twitch.
can we bask before you start? Alibaba, who you've appropriately said is a trash company,
Yes.
that is at like 52-week lows right now, basically. So
Oh, I haven't.
Oh, really?
I have not been keeping up since I've been crapping on them. What are they at now?
I just want you all to know Fabio lives for your hatred of him when he talks about Baba and the VIE structure.
$72.
He loves
Bro,
it.
I live for it.
All you
Yeah.
people that argue about it, I don't know what your point is. You want to cite Chinese financial statements and not consider that they might not be accurate.
Andrew, can you send that to me on Discord, because I can't access it via StreamYard.
I asked Everything Money on their live stream before they banned me. How do you adjust your Baba projections for a VIE structure with China? He said he just increases his discount rate.
I hate him.
I'm
Sorry.
like, oh god, that's cute.
So is it
What a great answer.
10, 12, 14 instead of 12, 14, 16?
Yeah, it's like, what did you adjust? He's like, I just make adjustment. I'm like, you don't even know what I was asking you, honestly. I guarantee. But
all right, so Andrew wanted me to share this. Oh, this will strike up a conversation. Oh my god. All right, so let's
you
go
need someone to
this.
come on and fight you about this. I would love to see that.
I've already had debates with people on it, and we never get to an agreement. They always get stuck on a couple of the issues. They don't fully grasp or comprehend the fact that they truly don't own anything, and then they, in my opinion, because this is my opinion, they ignore the historical precedents for the Chinese government absolutely screwing the foreign investor and admitting they own nothing, because there's at least 3 court cases I cited in one video that I posted
right?
back in 2021. Yahoo and
Yep.
SoftBank was not a court case that they lost. They were threatening to sue. They settled because I know that SoftBank and Yahoo knew they would lose. And if they had lost, they would wipe out the balance sheet of both Yahoo and SoftBank. Because at that point, that would be an admission that in the case of Yahoo, so much of their assets that they had recorded on their balance sheet was worthless. They would never, so they were forced to get screwed. Alibaba was able to give them pennies on the dollar and get away with what they did with Ant Financial. Yahoo had no choice, and neither did SoftBank. But anyways, there's some other smaller businesses that foreign investors had sued in the past for, and the Chinese government always ruled in the favor of the Chinese company, and then always just citing the law. You weren't allowed to own this in the first place. You have no ownership in the assets. Go kick rocks. So,
if you like this post, it's like, if you believe these numbers, like, first of all,
this is a great comment, by the way. Before we get into this tweet, all the major investors like Charlie Munger must provide that they always bring up for Baba also gave up on their investment in it. Yes, I'm still getting fought by this. I'm still getting fought by this.
They always put that he's in it. It's like, but he already admitted he was wrong. I did you miss that part, people?
Yep.
Oh no, you think I'm joking? I recently
got
a comment.
I don't think. Yeah.
I literally recently got a comment saying this. So yeah. All right, let's address this tweet because it's so silly on the face of it. Amazon 1.51 trillion, Baba 178 billion. All right, cool. That's a great start. Amazon 554 billion revenue, Baba 129 profit margin. Okay, Baba has a much higher profit margin. Whoa. Well, the revenue base is way higher in Amazon, and kind of breaking down where that revenue comes from, it's from the retail platform. And remember that Amazon and Baba are quite different in how they conduct their retail e-commerce business. Baba is more akin to an eBay rather than an Amazon. It's actually incorrect to call Baba the Amazon of China. Free cash flow, Amazon 16 billion, Baba 30 billion. Misleading because of the growth capex that Amazon engages in. Revenue, blah, blah, blah. Okay. Verdict, Baba, was Amazon the share price with stronger fundamentals would be $310. Baba has nowhere near the strength of Amazon in the cloud business. And I mean, I don't really understand why American investors insist on making the comparison. Well, fun fact, I have owned Baba in the past, and I've made money on Baba because I've played it on sentiment. I'm on record doing this here on the YouTube channel, and I maintain and will always maintain that it's frankly a worthless company. But until the Western investor fully appreciates that they own nothing in this, it will have whatever value that you're able to sell it to someone. And so I have profited in the past to make a point, and walked through with people here on YouTube through that process, and actually discussed why I would buy and then when I sold. So this is a great comment. Yeah, this is a great comment too.
The CBS.
Yeah.
I wish I
So-
saved it because I looked at a Chinese ETF, and at the bottom of the filing, it literally is like, it tells you straight out, like, you have no ownership stake in these Chinese companies. The Chinese government literally is on
Wait,
like
sorry,
the bank
what was
account.
this?
You have no what?
What was
Oh,
this?
it was like a prospectus for a Chinese ETF. So I don't have it right now, but it says right at the bottom, like, you have no ownership rights to these companies. It also talking about the Chinese government on the bank accounts of the Chinese companies. So they literally, the money is the Chinese government's money too from
Yep.
these companies. There is no separation. And like you said, like, these people don't have, they just don't know any better. Some of these people that buy these Chinese companies, like, there is no separation from the government. Like,
Andrew wants us
Also,
to read
like-
the comments because there's cope in it apparently.
Oh, it's funny to me that they use free cash flow for Amazon.
Yeah, no. Yeah, I know.
Most recently.
I just, as an accountant, I'm like, how do you trust those financials? Like, these people that do valuations of Baba and do projections on YouTube, they never talk about, like, what's the risk of these not being correct? Because they're not under, like, I know they had that agreement last year, which sounded like crap, honestly. The let regulators in, full
No.
access. Yeah, right. But
yeah,
one
yeah,
comment.
that's totally not what it actually sounds like.
it sounded like a dog and pony show, right? They went to Hong Kong
Mhm.
and they got to look at and interview staff. I was like, okay. When I
No,
do audits, I have full access to an organization. So
I am making this whole argument ignoring the potential for fraud. I'm accepting all the numbers to be true. I'm coming to the table just saying, okay, I'll assume all the numbers are correct. I will assume zero fraud. And even with that assumption, my conclusion is the same. So before I even get to that, I have no interest. And I have no idea why so many retail investors are wanting to die on this hill. When you have a lot of super investors literally bending the knee. I have had some comments coming and say that's misleading to say they bend the knee. I posted Charlie Munger's video talking about it, and then people came back and were arguing semantics that he said it was on the valuation. And no, if you actually listen to the full interview, he discusses about the political situation in China. So he finally admitted later in his life, towards the end, that it was a mistake from a variety of fronts. He says it's a damn retailer. Again, this actually counters the point that this individual is making, because he's implying that it needs the valuation of a tech company, not that it's a retailer, when Munger said it's a damn retailer. So it negates this whole tweet. Just going from that. And if we go into the commentary around the political situation, Munger admitted that it was an issue. And when he talked about what happened to Jack Ma, he was disturbed by that. That actually, I think, had an impact on Charlie Munger's view of Baba. Exactly what happened to Jack Ma. So, yeah. Druck just bought Baba. Again, you can make money on the sentiment. These guys are not buy and hold forever stockholders. So I'll make the point again. Until the Western investor fully realizes and understands, as a broad group, a broad investor base, you own nothing and it's worthless, you still will find people investing it based off of sentiment. I did this. They will do it. They will do it better than me. They have better information than I do. And I feel like it's quite obvious to see that the Chinese government will affect policy because, someone sent it. Ricky, if you're still in chat, if you can send me the article again of the new Chinese regulation that was passed in effort to boost the stock valuations or stock sentiment of their local stock exchange. They restricted the selling of those stocks. I said in prior videos, do not be surprised when the Chinese government affects policy, enacts policy that coddles investors. It's all an image. It all makes sense. If you put the pieces together, you start to see why certain behaviors, why you're observing certain behaviors. Because if you're confused by why you're observing certain behaviors, you're not paying attention. You're just like the Reuters reporter who had no idea why Yahoo and SoftBank had no power over Alibaba. You're just like that reporter who was clueless. And then you're confused. It's only your fault that you're confused.
It's funny that they are trying to coddle investors by removing liquidity and being like, you can't actually access your capital. Like,
for which one? Sorry,
I said it's funny that the Chinese government is trying to coddle investors by being like, oh, you can't sell. Like,
oh no, but that's to Chinese citizens.
Chinese. Okay, yeah.
Mm-hmm. Yeah.
No,
Chinese
that's what I meant though.
Like,
yeah.
You
can't sell. So like, why would you, like, you're gonna buy something because you want it to go up, but even if it goes up, you can't sell.
Yeah. Western investors will do mental loops to justify the investment.
It's okay.
Don't know why.
It's okay.
I don't know why they want to die on the hill. I have no idea. This is a great point by Dex, which I was just talking about. If you look at Druckenmiller's investments and then you assume all of them are just like he's buying them on the fundamentals, I don't know what to tell you. I have no idea what to tell you. Burry and Druckenmiller are perfectly willing and have perfectly engaged in sentiment trades. And we'll continue to do that to the end of time because there is money to be made in sentiment trades. And right now, I'll say Chinese government comes out and does anything to coddle the Western investor and boost sentiment. They have to. Xi Jinping comes out tomorrow and says certain things, certain words, and Chinese stocks are up like 15%. It's happened before. I have videos on YouTube where I literally said that don't be surprised when something like this happens. The next day, Xi Jinping came out, made a comment, and Baba was up like 15%. And that forced me to make a video saying like, you see, it happened. It was the best timing ever. I couldn't have timed it better. But I say Xi Jinping just has to come out and say something. Very next day, Xi Jinping comes out and says something. And then second video, boom.
You got a direct line, man.
Yeah. No, it's just again, if you're surprised by the behavior, then you're not paying attention. If it's surprising you, you're definitely not paying attention. Tepper is the king of sentiment trades. Also, Coupang. We'll talk about Coupang. I have no idea what this is. What does that mean? It goes against China 2030. Dictatorial countries have always made administrative mistakes. It's by very nature of establishing cults of personality, isolating yourself from sound advice, and believing that you are above whatever thing that you're doing. And you're completely ignoring the political intricacies of China itself, because you have many factions that operate within China. You have, of course, the technocrats. You have the staunch communists. And then you have the I I forget the other faction, but Xi Jinping kind of prides himself as like a successor to Mao. You have the technocrats that have lost power. If the technocrats were in power, I probably agree with you that the China 2030 is more feasible and open markets are probably more probable than not. But if you're just focusing on the China 2030 and you're thinking it's going to be all sunshine and rainbows and they're going to open up their markets willy-nilly without a power struggle at the top, the faction that is currently has the most power, being Xi Jinping's, it's not going to be as rosy as you think. So you need to understand that the Chinese Communist Party is not a monolith, and there are many factions inside of it, and they're vying for power, just like how our political figures vie for power. They just all just happen to be part of the same party, but no, they kill each other too.
So there's that side of the bell curve. We can go to the other side of the bell curve and say, if they try and invade Taiwan, your money's gone.
Yeah, if that even happens, oh my God, yeah. Your money's totally gone. I don't see a single reason at that point why the Chinese government would, at that point, because they've already, I guess, at that point crossed a red line, honor any sort of ownership agreement. Well, there wasn't. They wouldn't honor any contractual agreements. So China does need Western investments. Exactly. That's the whole point of what I'm saying.
They will say, so he's saying whatever they got to tell you to make you feel warm and fuzzy enough inside to give them money.
Get that money.
I don't know if that's meant to be like evidence to the counter, but yeah.
They just want to be right on Baba, I think. Whoever the retail people. I don't know why.
It's a hill.
They're so determined to be right and to prove you wrong. Even I don't get it, but
it's kind of ironic, Baba. It's like their sheep going to slaughter. Baba.
That's really funny. That's really funny. I'm gonna take that. I'm gonna take that. That's really funny. Look, and I say I deserve like victory laps over Baba, but not yet. But then I do. I like to talk bad about Baba more when it's up and there's a lot of excitement around it. Because when I was doing that, it was really exciting to talk about it because you had a lot of counter. And then as it began to fall, you started to see retail sentiment kind of wane. And then it rose again. It boosted up again. Then I got excited to make videos talking bad about it. And now it's back down again. I have my little small victory laps here and there. But really, it's now kind of boring to talk about it too much. But it's still exciting if people want to talk back to me about it because I'm fascinated with the desire to die on the hill. I'm fascinated.
We need more. Bring it. Put it in the comments.
No, I do want more of it because it's like these companies have different risk profiles. I love how people are talking about it. Amazon keeps expanding its TAM and increasing its revenue. I'm long both. Of course, you're long both. Free cash flow revenue. What are they saying? But that said, China was weighing it down. See, people aren't even addressing the crux of the issue. They're only surface level risk. Usually, it's just focused on invasion. It's CCP destroying the company itself, which I don't think that's a rational belief. I think that's actually less likely. You already can stop at I don't own anything. Full stop. I don't care about anything else. Because some people start to say like, oh, the Chinese government's going to harm the company. It's like, I don't think they want to harm the organization, but they will stomp on your whatever rights you think you have, and they can just cut you off at any point. Of course, they would love to keep the party going as long as possible because it's free money. You can raise capital without giving ownership. Why not? But Strongman, well, Strongman admitted as much that it's a small allocation for him, and at the end of the day, he wanted to take a gander on it, but he prefers to invest in broadly diversified index funds in VT. So
he clearly says, as a Boglehead, 5% speculate, do whatever the hell you want with it.
Yeah.
So he can invest logically. So to him, anything he can invest anything he wants with that 5%, and he's still a Boglehead. So like trying to say like strongman bought this or that, it's kind of, it doesn't really prove anything. He could buy crypto with his 5% and he's still a boglehead.
JC's comment here, you won't believe how many times this happened to me. You won't believe how many times. So like I will have an hour-long video going over not the most detail possible, but okay detail as to the intricacies of a Chinese VIE structure. And then someone will go, I will say that, and they'll go, but ADR is the same. And I'm like, in what earth, what planet is what I just described the same thing as an ADR? Have you looked up what an ADR is? It's like American Depository Receipt is another, let's call it umbrella term, but sorry, I got visibly frustrated there because it's true. It's like I do get comments like that, and sometimes I'm at a loss for words when I see that. I'm just like, what do I say to you after that? Club member here saw the discussion about energy at the beginning. What do you think about SCU? Suncor Energy. I don't really have any thoughts on them now. Okay, if you're a club member, ask this on the icon because one of our panelists / analysts has better thoughts on Suncor Energy than I do. I don't have any service level thoughts on Suncor, but that's a good question to ask. Drop it in the questions, stream questions page, and then we'll be sure to address it in the next icon. Oh, thank you, Cole. Baba is undervalued. The market is a voting machine in the short term and a weighing machine in the long term. With China new outbreak, that stocks can keep going lower. Sure. For Chinese stock valuations for individual stocks sold in China, part of the protected class of shares, I don't care if they go lower, don't care if they go higher. To me, it's all the same. The value is the same. It's not fully zero because there's always a chance the law can change, but there should be an extreme discount. I don't think the current discount's enough. It would not satisfy me, but there should be an extreme discount. And then we never even got to the capital control restrictions. I think one of you alluded to it with like restricting when your money can go in and out. But yeah. So I think on closing thoughts here, because we're right on an hour. By the way, if you guys enjoyed this live stream, feel free to leave a like. I'm going to shout it out again. Because again, we have roughly the same amount that we discussed before. And the likes we're only at 30 likes. What is this? What is this?
It's because you gotta say smash the like button.
Are you not entertained? Are you not entertained? So,
all right, I found that. Okay, this is the prospectus that.
Share it, please. Please share.
Well, I don't have highlights out of it. It's Cran Shares summary or Cran Shares CSI China Internet ETF. CWEB is the ticker. So anybody watching this, download that prospectus and just search the term foreign. Okay, there's about 35 matches. Read all the paragraphs where they talk about foreign in there. So read that before you hate comment Capital Mindset, and you'll see.
No, hate comment, please, because I find
they
all the
clearly lay it out. I like this is better to do with the ETFs because the filings for like Baba, it's hard to find this stuff. But so CWEB, go download their prospectus, search foreign, go read all those parts. They tell you right in there the risks you're taking. And you say, well, you can own it in an ETF. It's like, it doesn't matter.
Yeah, no, I've seen those arguments.
Like they literally, well, if I buy the Chinese stuff in an ETF, they hold it and they can hold it. No, they can't hold it either. Like, but they can hold it, but you can't get.
They can hold it. They still don't own anything.
Yeah, and even if they legally held the shares, you're not Chinese. So it doesn't matter. Like you still lose. But
yeah, or I've heard this other one. Or I'll just buy it in Hong Kong.
Oh, sure.
Yeah. Show the big board. Boba the dog. Are you asking for us to show the big board? I don't know. Big board bossard. I think that he meant big board. But yeah, quick comment on Coupang. It's speculative holding for me. Added more to it because I know Fuhat. Look, he's keeps saying Coupang. Added more to Coupang. And because there's been a recent sell-off, but it's still a relatively small position. Things I like about it, it does give you foreign exposure, e-commerce, to a more true clone of Amazon e-commerce. They do have a stronger food delivery business in South Korea, from my understanding. There's actually another competitor that has a quote-unquote better consumer experience with regards to traditional e-commerce products. But Coupang's recent investments in infrastructure still have to play out. Again, these are the things that why you might be seeing why it's a speculation for me, because I don't have it fully mapped out in extreme confidence that this is going to execute well. But it's like a gander I'm taking. Druckenmiller is also invested in this company. If that makes you feel better, it doesn't really make me feel better, or to the good or to the bad side. I'm neutral about it, but hey, it's something to talk about, and it's exciting to see in his 13 apps. Oh, I'm on the same side as such a great investor like him. Yes, also Bill Gates was invested in Coupang. I think that with their expansion into Taiwan, we'll see how they're able to replicate their success in South Korea. Within South Korea alone, there's still strong opportunities to continue to take market share. But really the concern for Coupang is if they're able to replicate that same success story in other countries. Forget about the United States. If they were somehow able to break into the United States market, that'd be a big deal for them. But the United States has already been practically conquered by Amazon, which is the most valuable market in the world, the most desirable market in the world. They can, however, affect some dominance in the markets like Japan, Taiwan, South Korea, and that will still be a relatively strong investment return if they're able to achieve the market share that they claim they can achieve. So, yeah, great management. If you actually look into the management and you try to see at least like read into the history of the management team, you might start to trick yourself into falling in love with the stock. Be careful with that. Falling in love with personalities like management teams. Be a little bit weary when you do that. But that being said, you can do that to kind of get an idea of where they're coming from, what they've achieved in their life. It might make you more comfortable with, putting your money behind them. So those are my quick thoughts on Coupang. Do you look at PAGS with Brazilian, which earnings was up 18%? I'm wary of investing in Latin America, to be honest. But I mean, sure, it could do well, but I'm not really interested in investing in Latin American businesses. Personally, call it, rational consciousness about it. What food companies in the USA would people eat more in months November today? Which I began looking at. What do you guys think about food companies as we wrap up here? Because I don't want to take any more time because we're already past 2 hours. But
TTCF is really cheap right now.
we could probably buy the whole company.
Yeah, for $20.
Like 20 times over.
Wait, how much is it trading at?
So I tried to see if I could buy the share.
It's bankrupt. I don't know.
Schwab blocked me.
Schwab's like, no, you moron.
Yeah, I called them. They're like, no, we don't do that. They're like, wait, it's bankrupt and you want to buy it? Like, so.
Yes, $83,000 market cap. Yikes.
The only thing I know about South America that's any value to people is I heard this from was it Ashwath Demirdath, the Dean Evaluation.
Oswald Motorin.
That name. So the Brazilian government has ownership stakes in certain companies in Brazil. I don't know if it's all of them, but these ownership stakes allow them to influence decision making in these companies. So just imagine, like in America, if New York State owned shares in a company, and then they go, "Hey, we want to lay off 15% of our workforce so we can survive." And then the New York State will be like, "Oh, hell no, we're not going to take all that unemployment on. We got elections coming." So those are considerations in Brazil that are not in America. It's my only example. So
Yeah. Real quick on this comment, yes, I'm in full agreement with that. That's part of the thesis, actually. Oh, yeah. Well, oh, what do you think about Fubo? I know that Jesse's like 50%. I'm kidding.
what a stupid
Hey,
company.
I just
to put
signed
money
up
in.
for a Black Friday discount, man.
Did you?
I did.
Yeah, as a consumer, you might like it.
So it's one of the one of the very few streaming services that has Root Sports, and Root Sports is local to the Seattle area and has broadcast rights on a lot of local sports. So like Mariners games and the Seattle Kraken NHL, they're blacked out. Yeah, they're blacked out locally because of Root Sports. It pisses me off like no other. I hate this company. But anyway, so yeah, I got Fubo to for a couple months to try out because they had Root Sports on it. But yeah, man.
Jeremy was like doing videos where he's like, "Oh, I like they're going to have gaming, so they'll be gaming in the streaming while you're watching stuff." And that was after they already announced they weren't doing that.
ESPN
anymore.
bets, baby, let's go.
Wait, no, wait. You're joking, Dan.
No,
you're joking.
I don't know if he knew that they said they weren't like gonna not do it. I wish I could. I don't know what video it was.
Oh my god.
So like that's what I thought he was buying it for, but then they cut they're like, we can't make this work with the regulators. So
well, it's up 91% year to date. So
buy it at the bottom, bro.
Yeah, it's actually a pretty good company. And if you
buy
had
it there and then you sell it up there, and
202%, it's actually a really, really good company. I think Fubo's going place. Oh,
wait, how much money are they losing right now?
Oh shit. Well,
have they ever made money?
Ignore that. Let's stay here. Let's actually no, that's not good enough. Let's stay here. Let's look at it from this perspective.
Drum roll. No, they have nothing.
I like looking at Fubo glass half full.
How do you buy? It's never made money. Never. Like, how do you buy this? Like, if you're Jeremy, like I get degen people buy it, but like someone with that much, Jesus.
Well, I mean, Jeremy is kind of the definition of degen, so
this kills me. Oh, it's like the SoFi. It's trending towards profitability. It can also not trend towards profitability really fast.
Infinite losses.
Like, I know. It's like,
well, yeah. You gotta buy before the profits to get the 10x, bro. Yeah, Dan.
That is something I would love to study if I could like get grant money. Performance returns of an unprofitable company that went profitable. If you bought it before it turned or compared to like if you bought it after, is there a big difference in your returns?
I think there are studies on that. No,
are there? It's tough to find. It's so hard to look at economic papers. Like they're hard to search online because I'm not in any of the paid services that have that database. So
I think there have been, and I think that it's not like
but you know the problem with those studies, they never look at what you want them to look at, right? So they don't draw the conclusions you're looking for.
Thing is, you should find out that answer, but don't tell anyone. Upstairs. Just don't tell anyone.
I'm pretty
If
good.
there's a information that you figure out and no one else has it, and you can create like a pattern around it, why would you tell? Why would you disperse that into the world? Why would you give it to the people?
They don't
Keep
deserve
it
it.
yourself. What the fuck did that mean, Dan? I know DGen people, but Jeremy, dude, put two.
Yeah.
No, I was just trying to say, like, I get like normal
No.
gen retail, but like you would think someone with that much, I don't know, like someone with millions of dollars, like
I thought he lost like 2 million early. Like
why
he
are you
lost 2 or
buying
3 million.
unprofitable company? Like that should be a line in the sand for retail investors. If it doesn't make money, just walk away. Like
So
Easy come,
you'd
easy
be
go.
better off. And just vast majority of the time, you'd be better off. But
several people within I guess the sphere of viewers who watch, Strongman, myself, etc. They will send their tracking, because there's several people. There's one guy that sent me a while ago a very detailed Excel spreadsheet of every single potential Jeremy trade, and like certain ranges at which they believe that it was done, like on a positive side, on a negative side. Long story short, the total loss of like last year roughly came out to about just over 3 million. And then he has like the gall to go year to date, bro, on like Twitter and show a gain of like $700,000 and go like, yo, I'm the guy. I'm that guy.
Check
like,
it. Do you guys remember when he oh man, it was like peak of I don't know, like momentum degen times back in 2021. He had a video being like, well, I've like I'm starting to think of like, how do I become a billionaire?
oh my god.
I think he probably went from like 8 million or so and probably lost 3 or 4 million of that. It's like, oh man.
he'll find
You pull, okay, Dutch Bros, you could pull that up. Finally, they have 2 quarters of profitability, so you could see like if you just waited,
yeah, but
you would have saved yourself all the destruction.
yeah, but there's one problem with Dutch Bros. So
Lots of
I wanted to do a video on this, and I've been making it. I wanted to do a video on this for so long. Kingdom did not know this. I don't know what Kingdom did not do enough research into this company. That is not their market cap.
Is that only like 5% of the company or something?
Yeah.
I thought it was 10.
That is not their market cap. That is misleading. Investors, retail investors, look at this, and they are not. Google's not lying to you, but that's technically not the market cap. And the P ratio is not technically the P ratio. I won't bury the lead. I'm sorry. I like the suspense. I like the quietness. Like, oh, he just said something. I have fun a little bit. Yeah, this is an American VIE, so variable interest entity. The thing that I dog on Chinese companies, a lot of Chinese companies for being, but not all VIEs are created equal. I would not tell anyone that this is worthless or it's a sham. It's an unfavorable structure, yes, and go figure. If it's an American VIE, I also recommend that it's probably not good investment. Wow. And that's in the United States. So yeah, you have this one, you have Rocket Mortgage, and in the UK, off the top of my head, you have Interactive Brokers. So the Rocket Mortgage went through a similar situation when there was a misunderstanding, and it was reported on by CNBC, by the way. So they got it wrong too. I have a video talking about them getting it wrong. With Rocket Mortgage, they got the short interest wrong. There was a misunderstanding of what the short interest was being calculated at. Had everything to do with the ownership structure, got everyone a little bit confused, and the panelists got confused about it as well. I didn't check to see if they corrected themselves at a later point in time. The point was retail investors who saw the initial story as reported on CNBC, probably did believe that the short interest was a certain amount, that it was absolutely insane. And then once the calculations were like adjusted, the actual short interest was way lower. Still high, but way lower. And Dutch Bros, yeah, that's not the real market cap. I have no idea what the retail holding is in Dutch Bros, but yeah, 4.78 billion is not the real market cap. That was a great reintroduction for you, Jesse. Just like,
Thank you.
I saw it. I took notice.
Yes.
So
All right.
I was going to make a video on this because I think it'd be useful for people to know about it before they degenerately buy this company thinking it's something that it's not. And I have a general rule of thumb. I am a complete avoid if you create an ownership structure that completely tries to shaft me in favor of the owners. So
I think he would have told you he just wanted to own it. He didn't give a shit.
Who?
Kingdom.
Oh, yeah.
I told him you should probably just wait till it starts making money at some point. But
no,
okay.
you'd be right too. I mean, yeah, you would have avoided it on that rule.
What is it? Is that publicly traded? Or
it's funny they don't have the term VIE in their 10K unless they spell it out.
Well, it's Tim Hortons. What about that?
No, they don't.
Tim Hortons is publicly traded.
Is it? I don't know.
Isn't it
I would just think. I would think Kingdom would be all over Tim Hortons. TSX maybe? No, THI.TSX. No.
I will.
All right, I'm gonna bounce.
All right, sounds good. I think we should all call it because we were past the 2-hour mark, but it was very fun. I had fun.
I got power back, so I'm happy.
With that being said, guys, I will probably degenerately hop on voice in the club to have a after hours party session with you guys where we can just talk, shoot the shit and talk about random stocks. But that will be the end of today's stream. So anyone, club members, you want to join, feel free to join voice and I'll be on there with you for a bit.
It's going all night, people.
No. I refuse. But
get it in before you turn 40 because you ain't doing that then.
Oh yeah, once like kids are around and stuff. No, I already know. What? Because I every parent has always told me it's like those first like years of the kid, like Strongman's going through right now. He's like telling me, he's like, Fabio, you have no idea. And
the like, first
no idea
is the dark ages.
The dark ages.
Every time you have another kid, it's 4 years. I tell everyone it gets way better at 4. So
okay, what if you just keep spacing it out and every 4 years you have a new one?
The dark ages can go on for a while.
The dark ages.
It's the very, very dark ages.
You don't get to go out much. If you leave the house, your kids might just freak out and cry, and you have to carry luggage everywhere you go.
I would use that as a life lesson. Like
half the times you leave the house, your kids hate your guts and cry at you. So
they're like,
"Why are you trying to be your parents?"
They're like, "Bring me McDonald's."
I could tell you all. There were some times I lost my mind. So.
I'm wondering.
Like, I gotta go check on my investment guys.
Man, and then they hate you for it. So, anyways, but okay.
Yeah. It'll be the next phase of my life. All right. With that being said, everyone, if you guys enjoyed the stream, again, feel free to like it. That does help the channel out. It lets us know you like the content we're bringing out to you guys. If you're not subscribed, go ahead and subscribe, and we'll be keeping an eye out, or you guys should keep an eye out for when we do end up, when Jesse has his power working, we're going to do that cybersecurity live stream. That's going to be exciting. So also with that being said, I'll say end it like that, because now we're at the 2 hour and 20 mark. Thank you if you stayed throughout the whole time. You do not have the attention span of a goldfish. And we'll be seeing you on the next one. Bye. Oh, Portillo's, I'll look at it at some point, but if you're in the club, feel free to ask it, and that I get to those a lot quicker if you guys just ask me or any of the other members. All right, I'll see you guys.